Coinbase reported earnings on Tuesday for their Q2 results, and initially it looked like they absolutely smashed it. The price of Coinbase shot up the day after, but since then has pulled back. There are some interesting takeaways in the report itself, so in this video, we're going to cover some of those. First off, the Q2 earnings report, this thing is way better looking in terms of formatting versus Q1. Look at this. Look at this difference. This is massive. Already, Coinbase is improving. But in all seriousness, besides it being a prettier report, the numbers coming in look pretty darn good. I mean, Q2 saw monthly transacting users at 8.8 million versus 6.1 in Q1. I mean, the trading volume's up and the net revenue, look at this, $2 billion for the company. And what really stuck out was initially this net income of 1.6 billion. And I was thinking, oh my God, these guys are having a 70% profit margin. Like, what the heck is going on? But we'll talk about this is really coming down to a one-off. So the net income is a little bit deceiving because of that 1.6 billion in net income, around 737 million was a one-off tax benefit. So you do have to factor that in my opinion, and really just strip that out because that's something that isn't going to be ongoing in the future. So sure, that's great for the short term and the net income looks really good, but we don't want to include that every single year forever. So although the initial EPS came out around 642, if we look at taking out that tax benefit, it's really more around $3.50. But don't get me wrong, still a solid number because if you look at the average estimate for earnings, it was only $2.24. And if we look at revenue, the average estimate was $1.77 billion. So their net revenue beat as well as their earnings. One interesting takeaway for me from the user growth section is that they are expanding their products and people are using more of their products. So around 27% of their retail monthly transacting users are using other non-investing products, whether that's staking or their earn feature. The fact that people are using it more than just trading and investing is good for the long term because if they get more engaged users to use multiple things, then it becomes more of like a full suite platform instead of like, oh, Coinbase is expensive for trading, so I'm just going to switch to Binance. Oh, Coinbase is cheaper now, go there. So they're kind of expanding their suite of products and monetizing it across more users. As that widening usage of products happens across retail users, that leads to increased revenue. So this blockchain revenue section went from 10 to 39. And this is directly correlated with the Ether staking. So Ether 2.0, I'm actually using that as well. There's a staking pool and Coinbase is taking a piece of that revenue that's coming in from the staking. So this revenue, what's nice about it is that it's sticky, meaning that as people stake their Ether, this should stay pretty constant. And as they onboard more users and more users go to staking, this number can increase over time. Also related to user growth, you have the institutional side. So what's interesting is they have 10% of the top 100 largest hedge funds using Coinbase as an exclusive partner. And they have now over 9,000 financial institutions using Coinbase. So as the exposure for crypto increases amongst institutions, Coinbase directly benefits from that. Also, I find it funny they shouted out Elon Musk as a leader in the space. In my opinion, on the institutional revenue on the transaction side is probably stickier and has potential to grow at a pretty good pace because there's a lot of money out there that's kind of waiting to get in the crypto space. And with Coinbase being a public company, they have this image of being safer and institutions may use them as a partner since they have that first mover advantage. So the transactional revenue coming in at 102 is good to see expansion there. And then also on the institutional side, custodial fees are increasing. So just keeping assets safe on their platform, they're getting paid money for that. And going from 23 to 31, it's a small number, but that's a pretty big percentage jump. There's also some interesting takeaways if we look at the actual trading volume. So we see that more institutional trading volume is happening on the platform, which, like I said, means that the institutions are trying to increase their exposure to this space. And then secondly, if you look at the percentage of trading volume, a lot of it is shifting to other crypto assets outside of Bitcoin and Ethereum. Ethereum actually had more percentage of trading volume than Bitcoin, and then 50% is just other crypto assets. And this is extremely important for Coinbase as a company because they actually mentioned it in Q1 related to other crypto assets, basically saying that their competitors are adding way more crypto assets than them and they're experiencing large trading volume. So in order to compete, Coinbase would have to add more crypto assets. And that's exactly what they did. They added 29 new assets for trading in Q2. So compared to Coinbase years ago, where it was just Bitcoin, Litecoin, Ethereum, they're adding a lot of crypto assets. Currently, they support 83 assets for trading, and adding 29 in a quarter, that's a pretty big percentage of that total 83. As they go forward and add more and more, they should increase that trading volume and take away that volume from decentralized exchanges and other platforms like Binance. Because Coinbase definitely knew it left some money on the table when alt season was exploding and the trading volume for these altcoins were just crazy high. And Coinbase wasn't getting any of that action because people were going to DeFi exchanges or other platforms that actually had those assets. So if they can add 1,000 cryptos to their platform, well, you can always go to Coinbase to trade whatever you want. Definitely a smart move to keep that retail volume on their platform. Regarding innovative products that we haven't already talked about, we have the Coinbase card, which they launched in Q2. Pretty much a Visa debit card that rewards people in crypto, and they'll take a part of those transactions as additional revenue. Something else that is kind of exciting is they're getting into the financing game, so they're allowing people to borrow against the assets on the platform, and they can make money that way. Then you have Coinbase Cloud, which sounds pretty interesting. Basically a platform for developers to build different applications related to crypto or blockchain. And as a developer of an app, you can connect to Coinbase tools that already exist. So whether it's you need data from an exchange, or maybe you want to implement crypto payments into your app, you can go to Coinbase Cloud and work from here. When it comes to looking ahead, it's all about adding more assets to Coinbase, which we talked about the importance there because, that transaction volume from retail really equals to a ton of net revenue. They plan to expand internationally, which is good for revenue as well, more customers and more users. And then lastly, they talk about trying to allow Coinbase users to interact with decentralized apps, which is also important because I think as DeFi and decentralized applications get bigger, Coinbase is centralized, but they don't want to ignore the innovation outside of their own company. They want the Coinbase users that they have to be able to basically do anything in the crypto space. Going back to the financials, looking at operating expenses, we can see that the company is really doubling down for growth because their percentage of operating expenses versus their net revenue went up compared to Q1. And that's really coming from them hiring more people, spending more money on tech and development. So pretty much across the board, when you look at percentage of net revenue compared to Q1, went up. So went from 51% operating expenses of net revenue to 67%. Also, look at that full-time employee count. They're definitely hiring a ton of people and really thinking long-term. For Q3 outlook, they talked about the MTUs being around 6.3 million and $57 billion in trading volume for July. If we kind of extrapolate that in terms of what that looks like versus Q1 was around 6.1 and trading volume was 335. The trading volume seems like it's gone down quite a bit. And then in terms of monthly transacting users, kind of same as Q1. So I'd expect net income probably to come in a little bit lower than Q1, but still positive. And then they don't really say anything about full year outlook. The company always basically says, hey, listen, we don't really know what the trading volume is going to look like for the rest of the year. They always give these possible scenarios. For Coinbase, the profitability in their current state really does depend on that trading volume and volatility. So if we see a ton of whipsaw action, that's actually really good for Coinbase. And that's why it's hard for them to predict how the rest of the year is going to look because they don't really know. And that's why looking at the subscription revenue or the other services revenue is extremely important because that, in my opinion, is more sticky. And over time, if they can shift their revenue towards that, then the company's results would be way more stable and a little easier to predict. So if we project out Q3 and Q4, I would expect the company to land around $3 to $3.5 billion in net income, which is pretty solid. If they continue to trade around the current market cap, that would put their PE ratio around 20-ish. That is good. We just have to remember that the tax benefits was a one-time thing, so it'd probably be a little higher if you strip that out. Also, I think part of the reason that it's trading at that low premium, even though they're growing at that fast pace, is the uncertainty around their revenue as well as their net income going forward. And with that uncertainty coming from management around the future revenue and profitability, I think we're seeing that reflected in the stock price as it pulls back, and investors are worried that it's really more of a gamble when it comes to the earnings in the future, and they're trying to understand, can we take a gamble here on the long-term success of crypto versus the short-term risk of trading volume kind of just falling apart. With that all said, it'd be interesting to hear your guys' take on the company or the earnings down below. If you did enjoy the video, make sure to give it a thumbs up and consider subscribing to Main Street Wolf, where we talk stocks, investing, anything to do with money. Thanks guys for watching, and have a great day.